The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, as you can see from the charts that I posted here, the German DAX and the FTSE have all rallied. The FTSE even rallied in lieu of their esteemed prime minister being sick. I certainly hope he makes it. He seems like a really nice fellow. And even if he isn't a nice fellow, I hope he makes it. But we'll see. The way they're talking in the news today, the virus is almost over. We'll be back to normal by Thursday. That's only in 2 days, so we should be okay. Tomorrow, we're going to have a very, very special show. Shane Smolian is going to be with us the whole hour asking questions and showing some of the stuff that he's looking at with the Fed, because I think given the fact that the Fed is putting in whatever $1 trillion it is, we need to pay even more attention to what's going on here to see what's really happening. Now, I have to break this down into what I think is the most important things that happened over the night. I think from my perspective, because I enjoy trading gold and silver so much, I wanted to bring the chart of the, let's get this up here for a second. Oh, no, are you kidding me? You know what, folks? I am not in the den. I got knocked out for some reason, and I'm even surprised that I'm able to hear me. So I'll get this chart posted in just a minute. But anyway, I'll explain to you what the chart is before I put it up. It's basically this long-term weekly chart in the gold that we've been watching. Now, if you'll remember, we've been waiting for a price of 1744. That was the 78% retracement of the swing going back to 2011 when gold was trading at $1,932 an ounce. And here we are at the 78% level. Silver, on the other hand, was not even able to make the 61% retracement. It only got as high as 1590, and it should have been at least get to 1615 to make that 61% retracement. Whether that means anything or not, folks, I don't know. All I do know is the fact that we're looking right here at a full moon, and there's a bunch of other astrological stuff. So I think that's something that we need to pay attention to. I have recommended that those of you that are in the long gold positions or anything, the GLD or the SLV, to exit those. And maybe we'll have to buy them back at a higher price. Probably will. I don't know. All I'm saying is, these patterns are good for numbers, and that's really what they're good for risk control. And that's all you can do. I don't read the news. I unfortunately have to listen to some of it, but that's neither here nor there. That's the main thing. And the silver, of course, did not make that 61% retracement, but it's moved $4 an ounce since the buy signal came in at 1177 at the 1.27 expansion. That's a huge move, folks. That used to be a 2-year move, but now it happens in a few weeks. Also, I have I know I finally got back in, Marshall. Thank you very much. I don't know what happened. I got knocked out, and we'll be able to see that. And we'll see. We'll worry about this other stuff a little bit later. Folks, it's really difficult to try to explain some of these things because they do different things than what you would think. You would think with the stock market rallying strongly, gold would back off. Well, they're different. Each one of those works under a different cycle. So that's all I can mention to you, and that's all I'm really talking about. All right, let's move on to another one that we talked about, very important coming into this week, and that was the fact that we had that. Get this chart up here. Just take me a second to get it, and then we should be. Oh, shut the front door. Are you kidding me? Don't do this to me, Larry. Oh my gosh! Do you tell me I lost the bond chart? Boy, this is not good. This is not what I like to do. Ah, shucks. Hold on just a second. Maybe we've got somebody's got a caller coming in. I see I'm in the den. The problem is I've lost the most important chart that I wanted to talk about, and that was the bond chart because we had so much resistance there. What happened to the bond chart? That's impossible. I never miss a bond chart, but boy, I've missed this one. Shut the front door. It'll put the note up chart, but I don't think that'll make much difference. Yeah, it does too. Hold on. This would be the same thing. Hold on. We're okay. Shut the front door and raise the rent. Gold has made a top, boys and girls. I really think gold's made a top. I've got 3 reasons for that. I've shared 2 of them with you. The third one I can't because I've been encrusted to secrecy. Anyway, let's move on. Hey, look, folks, let me ask you a question, folks. This gold is really bullish, right? Okay, why does it give up $50 in a few hours after making the top? Hello? Judge is ruling something's not right. So be careful up here, boys and girls. That's all I can tell you. All right, here's the Treasury notes. This is the daily. This is the 78% retracement in the Treasury notes. If you remember, the Treasury bonds were at the 61% retracement at 182.16. We're now trading 4 handles lower, folks. In 2 days, Monday, Tuesday, we're 4 handles lower. We posted the chart of the TBT yesterday saying that it looked like it could really make some type of a bottom. I think I kept that puppy. Did I keep it? I think I did. I think I did. I think I can. I think I can. No, I didn't. No, I didn't. No, I didn't. So that's nothing I can do about that. Anyway, we showed that TBT chart yesterday, and it looked like it was holding some nice lows in here. So we'll pay close attention to it. As far as the retracement goes, the E-mini S&P, believe here's silver. I want to get silver first. Let's get this one up here so we can see it. I'll take a look here. You'll see that trade might have just started. Maria, so watch it real close. You can see here that the silver missed the 61% retracement by about 15, 16 cents. Gold, made gold went crazy. Of course, silver did not. But anyway, that's neither here nor there. And also yesterday, you would think with that big move in gold, we had a $60 move in gold, folks, from the 1638 up to. Wow, it was a $100 move. Wow, 1638 to 1742, $102 move in one day. You would think that the open interest would have exploded to the upside with that breakout. Well, it didn't. It just had a very small increase. Silver had a very, very small increase too. So there's not a lot of buyers coming in at this point. So I'd be really careful being long gold and silver up in this area. So that's neither here nor there. So we'll watch that very, very closely. We're going to be okay, here's where I get gold is in a confirmed ABCD up to 1804. Okay, Tom, I respect your opinion. As Abraham Lincoln said, I respect your opinion as wrong as it may be. I'm just joking, of course. And believe me, it can go to 1804. You know how I know that? Because if it goes through 1742, then it can go to 1842. But until it gets through 1742, it's not going to go through 1804. Hey, remember, we had a $200 and some break in gold. If you remember, we broke from 1690 down to 1465 or something. So, we can have these monster breaks and get ready to buy them. I'm just saying, trade the sucker, give me a break. Hello, raise the rent, shut the door.
If you're not currently using the Taz Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The Taz Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN is launching an open house for our Tiger's Den. For a limited time, you can get a 30-day free trial to the Tiger's Den. Just enter promo code OPEN at checkout and pay nothing for 30 days while you try out your Tiger's Den membership as part of our open house. With market volatility at an all-time high and people all over the world working from home if possible, TFNN is hosting an open house in our Tiger's Den. The Tiger's Den is an interactive chat room that runs all day where other tigers and tigresses discuss trading ideas with the hosts and members, along with charts and current market news, as well as live access to the charts the hosts use during their programs. Join us for the Tiger's Den Open House. Begin your Den membership today by just entering OPEN at checkout and pay nothing while you try things out for 30 days. For all the details and to start your Den membership today, visit the front page of TFNN.com. Don't miss out on the TFNN Tiger's Den Open House taking place now. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Sword to Danny Boy, broadsword to Danny Boy. Come in, Danny Boy. Come in, Danny Boy. I think I've lost connection here. The goat has landed. The chicken is in the pot. Okay. A couple of things here. Some of the folks here in the den are chatting about Norm Winsky about the call that he made on the E-mini, which is good. And he also made a call on this full moon that we have coming up here. But I think you have to realize that he also said on April the 4th that there could be a change in the way people are looking at the virus, that it could be a positive change. And that has been pretty good. So we have to give him a big hands up for that. Well, maybe I'll have him on again if he sends his checks in to me like he usually does. And if you believe that, I still have 2 shares of the Brooklyn Bridge. Had an interesting experience I want to share with you yesterday. Those of you that have been here to visit me and Sarah know that we live around a whole lot of old people. They weren't old when we moved in 28 years ago, but they're old now. And we shop for June and Fred. They're both 94 years old, as they don't drive anymore, and they shop at Costco, which we don't shop at Costco because it's just the 2 of us, and it's only 2 of them, but they buy in bulk. So they asked if I would, take their order and go down there. So I took the card and all went down. We got down there. There's a huge line all the way around Costco, separated 6 feet apart, and they're also only letting them in 2 at a time. So we came back, and then we figured out we best, buy the things online and have it delivered to them, which they will do. So I was the first time I've been exposed to long lines, during a period like this. They had a big sign there saying we're out of TP and paper towels. So that's it. By the way, folks, if you ever run out of a TP or paper towels, remember that the $5 bills are much softer than the $1 bills. So it's better to use those if you run into a really big problem. So keep that in mind. Let's take a quick look here. I want to mention one other thing. There's a great book. I know since you folks are home, you don't do a lot of things. There's a wonderful book if you can find it online. I've got it somewhere, I believe, and It's called Only Yesterday. I forget who the author is. I bought it for 10 cents at a garage sale. Oh my God, 30 years ago or more. Way more than 30 years ago. And it's a chronicle of the 1920s and the 30s, all through the high flyers. What do they call that stuff during the 20s? The Roaring 20s, all through the Roaring 20s. And that's pretty much what we're watching here to see if that's going to be the case. You're right. Tom is posting that we do have a ABCD pattern in E-mini that does come in at 2801, and that's not very far away. When you go up 16, 7, what did we go up? 1,900 points yesterday. It was the biggest up day ever in the market. So far, it could easily do that. I don't know, but that book. Get back to that book. I'm jumping around too much here. That book is called Only Yesterday. But Frederick Lewis Allen. Thank you, Marshall. Marshall, is it still available on Google? I don't know if it is or not, but that's a great little book if you want to read about it. You stop and think, folks. Historically speaking, in Marshall says it's available on at Google, and get it if you can. It's a terrific little book, but it describes what happened, and just you got to go forward. That book was written in 42 or 41. Oh, it's available in Audible too. Wow, that's awesome. But do you realize that of the 30 Dow stocks, there are no more 30 Dow stocks? They're all gone. During the 1930s, 16 of the Dow stocks went bankrupt. American Telephone and Telegraph went bankrupt twice during that time. And if you stop and think of where we were in the 1920s, we were at some of the greatest. Yeah, GE was the last one, and it went bye-bye too. So if you stop and think, what was happening in the 1920s and 30s, we were having the telephone. Okay, the automobile. Do you realize in the 1920s there were 2,000 automobile manufacturers in the United States? Over 2,000. So that's a really incredible fact. And stop and think, we were having plumbing, we were having refrigerators, electricity, all that stuff was happening in the 20s and 30s, right in the midst of the Depression. And we went through hell between 1932 and 1938. The only thing that bailed us out is a war, and that's what usually happens. We got another war coming down the road. Who knows who it'll be with? We'll have to be able to see. But that's it. Wait a minute. Basil's telling me DuPont and Raytheon are both are coming out of the. I don't know if they were in the Dows. I don't know what. Basil, are you saying that both of those were in the Dow at that time? Because I thought all of the Dow stocks were gone. That's what someone told me, and here I am, peddling fake news. But I didn't realize that DuPont and Raytheon were in there, but I don't know. I just heard that all the Dow stocks were gone now, but maybe I'm wrong. I should be corrected a lot, which I am, that's for sure. We'll be able to see what's happening. Okay, someone's asked the question of where do I think the S&P is going. You have to ask me what time frame you're looking at. Longer term, we're going to be looking at 1,500 or lower in the S&P sometime in the next 12 months, but we'll see. Okay, DuPont is now in the Dow. Oh, okay, there we go. Thanks, Basil. I appreciate it. Hey, folks, by the way, Basil, I don't know how you're going to do this. I don't know how you're going to do that much information and the webinar that you're giving. Anybody that wants to learn something should to listen in to him. If you got somebody like Basil that's willing to do a webinar for one day, boy, my hat's off to you, pal, because you've got a lot of, lot of the stuff. It was really, really something. So anyway, that's really cool to listen to Basil. Basil, what date is that they're giving the webinar? I heard Tommy talking about it today, but I was so shocked that you were going to do a whole day that I was just really, really surprised. So we'll see. Okay, historical components of the Dow, 1929. Okay, I guess they're all gone. Okay, thanks, Mitch, for putting that. Boy, that's one thing about this den in here, folks. There's a wealth of information in here for people, and I think it's you have to be able to use that as we can. So I would recommend that book. The other book that's really good, it's going to be Wednesday on April, a week from today, I guess. Yeah, and that's what it is, April the 15th. By the way, I've decided to let everybody have a tax break that day. You don't have to pay your taxes that day, which is really good. So it's from 9 to 4:30 all day, if you can believe that. That's just incredible, Basil. I don't know how you're able to do it, buddy, but God bless you. I've done those before, but man, they wear me out. Let's move on to the next one. Frankly, I don't have enough information to do one day. I can do about 15, 20 minutes, and then I get worn out. We've got to take a little break here pretty soon, and we will come back. And no guests today, so if you have any questions, I know the board is lit up right now. Al's told to stop calling in right now, but right after the break, you can call in if you want to. It's 877-927-6648.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, boys and girls, the flag is up, and they're going to see what we're going to be doing this morning. We're almost taking out the highs overnight at 27.45 in the S&P. Let's look at some of these other things. We've got gold now at $16.93. It's down over $50. Well, exactly $50. So if we get below the, let me see, 42, 62, 4, it's 4 or 5. It's $5 lower. If we get to 1680, folks, that would be down the $62 harmonic number. So that could be something to pay attention to. But given the fact that we're looking at in the gold market, it looks real interesting here. Let's take a quick look here at these bonds, because this is what I was really trying to show you before, because we had posted this quite a bit to let the folks know, oh dear, whatever happened to the chart? Oh dear, you just can't trust them anymore. Hold on, there it is. Let's get it up here. This is the one we put in the newsletter, and we also talked about this last week when the market was up in that area. We'll bring this up here. You'll notice here is the 61% retracement. You'll see there at the 182.26 level. We're now 4 handles lower at 178.16. Remember that the Treasury notes, the shorter term paper, that's the 2-year, 1-year, 2-year, all the way up to 10-year. Those went up to the 78% retracement during the time when the end of the world was happening, but now they're starting to alleviate. Folks, I'm a technician, and I don't understand a lot of, this is the understatement of the year. I don't understand a lot of the economics that goes on now, but I do understand charts. And when you have a market that breaks like we broke in the S&P, and scared the living bejeebies out of everybody, it takes time for that to take care of itself. You just don't rally back like this in night. Well, I don't want to. Let's forget that. Let's move on to the next one if we have any questions. One other thing that we want to mention that Norm was really good about. Someone here in the room just talked about it this morning, and that is, if you remember, we had Norm on last Friday, I believe. Yes, we had Norm on last Friday, the 3rd, and he talked about the 4th being a really key time where we might have a change in the sentiment for the index, E-mini, which it certainly was, and also the fact that the virus might start to alleviate a little bit. But he also said there was a big Astro event in the hog market. And we've had a pretty big jump in hogs. You remember when we looked at hogs, they had a tremendous move to the downside, and they've rallied about 10 cents a pound. But the 10 cents a pound is nothing anymore because they've fallen so much. I wouldn't, I'm not recommending buying hogs in here. But, folks, we're not going to stop eating. The problem is, as Rich Anderson was on yesterday, the suppliers of this stuff, the little piggies, and the cattle, the cattlemen are losing money. So what they're doing is they're liquidating their herds. Do you realize that they're selling the hides, the leather, pig skin and the calf skin? They're actually giving them away. It's almost giveaway prices and that stuff. So you're going to be able to find a really nice leather coat next winter. So keep that in mind. It's going to be really interesting. So we'll watch it. So we got gold trading here at 1689, 1690, and we'll see if how this is going to come out here. We made a new high here in the Dow Jones over the overnight session by about 40, 50 points, and we've already dropped 150 points. So this is not for the faint of heart, folks. So make sure you're using, your stop protection, and that's the main thing that you want to be doing. That would be the key to watching these things. So I think it's very important that you keep that in mind as you're looking at some of these charts today. 877-927-6648. The other one that I think is really important. Let's get this one up here. Well, I think it's relatively important. Let's get this up here, and you'll be able to see here. We just had a real interesting pattern complete here. Hold on just a second here, and I'll get this up here so you'll be able. Can't get that one. Sorry, folks. Lost that one. We'll get the other one up. All right. Could use a little help here today, boys and girls. If you have any questions, all I know is patterns, so I really don't. I got stories, but you don't want to hear those, so we'll move on to the next one. Let me check the markets here because it's jumping around quite a bit. It might give me an idea of what to look at, so just give me 1 second to catch my breath here. The crude oil. There's the one we want to talk about. Let's take a quick look in the crude. This will only take a second to get this up because the Arabs are out there talking to the Russians are talking to the Iranians, and they're all talking to each other. So we'll see what's going to happen with these things, but we're going to do one thing at a time. Okay, here's what's occurred over the past 7 or 8 trading days, and I believe this is important. And we'll see here just a second here. Get this up here. 1, 2, 3. There we go. Platinum. Yeah, stay out of it, Mike. Do something else. You know, like my grandma said when I used to want to trade oats, she says, go down and go over and lay on the couch until the urge to trade oats goes away. Natural gas. I believe natural gas, if you sold a rally, put a stop in. You know, these markets are still bearish, so selling rally is the way to go. But Mike, on the platinum, I don't think it's probably, I got a tradable bottom in, but it didn't even move at all. You know, we had a monster move in gold. You know, stop and think, Mike. Do you realize we got gold at 1,700 and platinum? I mean, there's $1,000 difference between platinum and gold. Years ago, the big thing on the floor of the exchange was having a platinum Rolex, because that platinum Rolex cost about $100,000. I think I told a story here about one of Bill Meridian's clients from Abu Dhabi came here to stay at the ranch, at the Canyon Ranch, with his whole family. And so he came over to the house in the morning. We trade a little bit. Really nice guy. I traded with him for a couple of years, and then he passed away. But he's a really super nice guy. Anyway, he wanted to go down and play, in the poker tournament. You know, it's a $50 buy-in, and he's wearing a platinum Rolex, and it's a $100,000 watch. It's all diamonds. I mean, it's just incredible. And so we're playing it. I'm playing at the same table, and he knows how to play. So he's sitting there, and most of the people there are from Nogales. And so we have quite a few of Spanish folks there, along with the usual old guys like me. And so one of the guys, Jorge, said to him, he said, "What kind of watch is that?" And he says, "It's a Rolex." He said, "Man," he says, "that's pretty nice." He says, "Can I see it?" And so he takes off the watch and hands it to him, and Jorge puts it on. He says, "Man, this is really nice." He says, "I'll be right back." And he gets up and he walks out into the casino to go show his girlfriend. And Amir looks at me and he says, "Is this guy good for it?" I said, "I have no idea." Anyway, he came back, and when they told him what it was worth, he almost fainted. But that was a funny story. So one other funny story, since we're talking about funny stories, when he first came here, he wanted to have a Rolls Royce. And we don't have a Rolls Royce distributorship here in Tucson. And so, I said, "We don't have one." I said, "You're going to get one." I thought he wanted to rent one. He was going to buy it. So he bought one in Phoenix and asked me to go over and pick it up. And I said, "Okay, I would," but they brought it down to me, thank God. So I just drove it over to him after they have it. They stayed there for a month, and I don't even know how much that cost. And then afterwards, I drove the car back to Phoenix, and he sold it back to him. So that's pretty much it. Anyway, let's keep in mind here what we're watching here, folks. What we're seeing in the news is not what they're telling us. That much I firmly believe. So sorry about the erratic nature of the show today, but the old cowboy's a little tired. This overnight stuff's getting too much for me.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190. The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, folks, I'm going to put up the chart here of this E-mini S&P here. You can see here we were still at the 382 retracement as of yesterday's close at 26.55. And then right after the markets started the evening session, I don't know what it was that caused it to jump. It might have been whatever, I don't know. But that's what ran up the last 900 points in the Dow Jones and another 50 handles in the S&P. So there's a 50% retracement up there at 27.95. That might be up at the, as Tom pointed out, there is a very clear ABCD that comes in up there at 28.50, and that's something that could also happen without any trouble, because you know the Fed is pumping so much money into this thing. You don't know. We've never had anything like this, folks. We are definitely under the old Chinese curses, living under interesting times. So what you have to do, at least this is what I have to do, is I have to go down to a smaller time frame, you know, to try to enter things that I think will give me the best possible return without having to risk very much. How could anybody trade a moving average on something like this? Give me a break. These moving average guys just probably got the signal this morning or yesterday sometime. You know, well, maybe it'll work. I don't know. But that's what the way I look at it. I hope that's what these patterns are for. They're predictive in nature. Okay, they do repeat. But the main reason they're there is because they do give you risk control, because if you go beyond it, you'll see it. When you're talking about $4 trillion, I mentioned yesterday, 2.2 trillion, folks. If you put $1,000 bill on the ground and stacked it up, it would go 126 miles into the sky. That's a lot. You know what I mean? That's really been see what's really been going on. So we'll see. Well, Jimmy, I hope you're doing well. Keep your stops working, and we'll all be fine. 877-927-6648. The lines are jammed up again, folks. Sorry, nothing I can do about it. I want to take just a second to talk about the U.S. dollar index, because we've reached an area where we're into some really interesting spots here with the dollar index. And boy, I don't know what's happened here. This is not a good sign, Larry. Wow, you know, I'm losing all my charts. This is not good. Oh, shucks. I have to get it up later, I guess. Well, I have to use the euro, I guess. Let's get this up here. Here's where we are in the euro, folks. I believe this is the daily chart in the euro. We'll be able to... yeah, that's the thing to do. Yeah. Anyway, we went up there, and I believe we're still heading down in the euro. Today, it had a nice little rally up to that 109.10. That was a very important level we sent out last night to pay attention to. And we went a little short, a little bit lower than that at 109.85, but we're below there now. So we'll see if it's going to be, if it's going to work or not. We'll have to do one thing at a time. The question about Apple has come up, and let me get this. Hopefully, I'll be able to get it up to. Here's Apple. You'll be able to see here. We got Apple up to above this shoulder line yesterday, which is good. Let's move this up here a little bit. This is not updated, folks, but I'll get it up here to take a quick look at it here. I think that's about where we got to, is around 259 yesterday. I'm not sure because my beeper went off and I didn't have a chance to look at it. So I don't know if Apple went above that level or not, and I'll have to check it a little bit later. So we'll be able to see. Okay, now Maria says the S&P needs one more last hurrah before shorting. Well, Maria, it's giving you lots of hurrahs. It'll probably give you more. So we'll see. But there is some ABCDs up there. We broken above the 38.2% retracement level. If you remember yesterday, I posted the thing from John Murphy, the grandfather of technical analysis and of modern days. And you'll notice we did go above that 382 retracement. In fact, we got all the way up to 27 and change will be there today. But that's what's happening. So we'll see. You notice that we're a tiny bit below the 50-day and the 200-day moving average. So those fellows haven't even kicked in. So you look at the Apple got a lot higher. Thank you very much. Thank you very much, Marshall. Let's just take a quick look here at Apple again and just take a see where that 271. Yeah, the 271 would be in a fit. Well, that's it. Let's just get there. You can see it. 271 was a 50% retracement, and we'll see if that's it. And okay. Bob says that he likes the 50% retracement at 27.76. Well, I think that's a good one too. I do believe we're in a bear market, folks. How far down we go, I don't know. But when you have a market that breaks like that with so much and so many things going on. Oh, one other very important thing. Our good friend over in Las Vegas, Mr. AR, pointed out that if you happen to be over 65 and go to Costco, you get to go to the front of the line and you don't have to wait more than 5 minutes. So that's a good deal. Thank you. The best trade of the day, Alan. Thank you so much. That'll be really good. But we're going to try online first, and if that fails, we're going to be able to do that. So we'll be able to keep a close eye on that as we look at it. All right. Let's remind you of one thing. This is a history. And I'm a big history buff, especially when it comes to the market. These are some of the things that have happened, well, during my trading year, which started 10 years before this. Well, actually 20 years before that. You'll see they had the big gold move in there. Wow, I can't believe it. Look at that. Whew. Remember, I was getting out of gold at 666 in January the 6th. I got out of it. Yeah, I got right out January 6th. The top was January 20th. At 860. So it went from 666 to 860. It jumped $200 into January 20th of 1980 and then went down for only 27 years, bottoming at around 231, I believe. And now yesterday we hit 742, up $102 in one day. And then you can see what happened. There was the Nikkei, when the Nikkei move happened in 89, that was Christmas Eve. And the Nikkei was trading at 39,000 and change. It didn't hit 40,000, and it dropped all the way down to 7,000. There was a Thailand, the Asian convention, what they call Asian contagion in Thailand. And then we had the tech bubble in 2000. That gave back 85%. The U.S. housing bubble, that gave back 85%. And now we're up in here, this red area. Well, I don't know why they did it in red, but that doesn't mean anything because things are always the same. They're never different. So we'll see that. Okay, the actual, Peter's telling us that the actual 50% retracement on the E-mini is 2785 versus 2776. I'll let you guys find it out. That's close enough for government work. Well, I have to tell you a funny story. I'll tell you the story. When I was working with Dave Nelson, who was working with Jim Sibbett and Earl Haddady, their offices were right next to each other over in Pasadena. They were explaining to me something about the opening price, and I was, looking at it, and I didn't quite understand it. And Earl took the salt and pepper shaker out, and he put the pepper on one side of the sheet, and he put the pepper on the other side of the sheet, and he drew a line down the middle of the sheet. And I said, "What are you doing that for?" He says, "Look," he said, "one side of this sheet is pepper, and the other side of the sheet is fly poop. Now, which is which? and I said, I can't tell. He says, nobody else can either. He says, the difference is too close. So remember that. That's important to remember things. You can't be too accurate with these things. You've got to be able to, try to handle your risk. Remember, you have to control your risk, the profits. You never know what they're going to be like. So thankfully, we're coming up to what we call the final break of the day. And then tomorrow, don't miss tomorrow, folks. We've got the Fed man coming in. Shane Smolian, thewolftrader.com, will be on, and he's been watching this like a hawk, and he certainly helped us a lot to tell us about these things. Remember, we covered the short positions at 2,500 in the S&P.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get the competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, I'm back, folks. Now, we've had just a small run in the Dow over the last 20 minutes. We've gone from 23,500 to 23,160. We drop 300 points, and we rally back 200 points. So we only had a 500-point move in the last half hour. So if your moving averages are working fine, may God bless and move forward. Folks, someone asked me a question, how confident do I feel about the top being in gold? I don't know if it's the top. All I know is it's a top. because that 78% retracement is a monster thing to look at, folks. If you remember here, just take a quick look at this, because this is something that we were certainly watching very, very closely. And I want to get this up here to remind you where we are here, because this is these numbers, they don't work all the time, but they work some of the time, and that's the whole key to this. But take a look at this. This is a long-term chart here on the silver. Let's get this up here so you folks can take a look at it. You'll notice here we had a 78% retracement here back in August of 2019 at the exact 78% retracement, folks. That was to the exact penny, $19.75 per ounce, and that was it. That was a 78% retracement, and then it dropped from $19.75 down to $11.75. Okay, $8 an ounce, and now we've rallied back, 4 cents an ounce. So we're just about a 50% retracement. So these numbers, even though they don't work all the time, they work some of the time, and that's all you can ask for, because you don't know which ones are going to work and which ones aren't. Whatever you do, try not to miss tomorrow's show, because we've got Shane on to talk to us about the Fed. Also, he's following the coronavirus. He does all the statistics on it. And he's a mathematician, so he's going to have a great show to see what's on. And by the way, we want to give some more kudos to Norm Winsky for his really good calls that he made last week on April the 4th in hog, stock market, and the bond. Well, no, he didn't do the bonds. We had hogs, stock market, and one of the gold. And so that he thought the gold was going to go a little bit higher too. So 877-927-6648. Live every day in an attitude of gratitude, and may God bless.